Are we on?
We're on.
Okay. I was waiting for the ad. Well, welcome everybody. Thanks for joining us again today. We are very excited to be back once again. And as always, Sandy is here with me. Welcome back, Sandy.
Hey.
It's good to see you and hear from you again.
I know I got skipped last time. It was we had a little special guest. So if anyone hasn't seen that, go back and check one out without me. It might be more exciting. But happy to be here again.
Well, the only reason we did that was because we had rescheduled with the guest a couple times already, and then at the last minute you found out there was an event you couldn't get out of. So yeah, we had to jump in and get our special emergency guest host Quentin D'Souza in on that. So, and it was fun. We had a good time, but we missed you, man. So glad you're back.
Sure.
So what's new, man? What's new with you?
Yeah, what's new? I don't know, lots of stuff. We've been doing a lot of revamping of our business, not necessarily real estate investment stuff, just businesses in general this year. So a lot of changes around that, I guess. We're going to be kind of launching a newer realtor brand piece into the new year of our expansion brand. So share more about that as we go, but it'll be a 2022 thing. But
a little taste for everybody.
It'll be tied in with the real estate, obviously, but real estate investments as well, and it's a lot to do with freedom and financial freedom, that sort of thing. So it'll be cool.
Well, quick question for you, Sandy. What do you got for people like just starting out? Let's say somebody's listening, they want to jump in, right? They want to get in on this real estate investing stuff. Like, what are they going to do if they reach out to you? What are you going to tell them about?
Well, I mean, generally, we're going to help them build a plan, right? So, and I know you do the similar. Is just help them build a vision and a plan for where they're headed. That's the biggest piece is really taking them, because most people don't really know, right? Especially if they haven't been overly active yet into that. If they've already got a huge portfolio and they've done a lot of business already, they might understand where they're headed and have clarity around that. A lot of people we talk with, right, don't have a lot of clarity on what they're doing and why they're doing it or what strategy works. And so we're going to kind of identify all those pieces with them and help them through that thought process and hopefully come up with a plan that makes a lot of sense so we can ultimately get into action, which is what's all
and
about.
You know what? The other thing that helps on that side is the virtual property tours that we're still doing virtual, where we can just walk through the house, basically show them the reasons why this one is attractive as an investment and the potential that it has and why we're looking here, and then answer any questions that they might have about it. But it's also just to give people, a really good idea of, hey, like, here's why we look at this as a great investment,
Mm-hmm.
So that's another thing to jump in on is, I'll tie this right in with everyone going over to our website and getting on our list for our free gift that Sandy will talk about later. But when you do, it gets you on our mailing list, right? So you can get in with Sandy and like get on that plan that he was talking about for new investors to get them on the right track towards what kind of investments they should be looking at and how to build their generational wealth, which is what this is all about. And get on our list for the property tours. And, just keep moving forward. But Sandy, tell them about that free gift.
It's the ultimate strategy for building wealth through real estate, which they will get when they sign up for our list there. And it's really simple. It just kind of gives you a bit of direction around how to build wealth. We think it's the best strategy out there to build wealth through real estate, and kind of guides them through that. Gives them a little taste of what pretty much the model we've used to build our portfolios, and how they can do the same. And like you said, they never miss out on a show, on a property tour, on everything else we kind of got going on. They're going to get notified of that so they don't miss out, and they can soak up all the information they need.
Yeah, that's it, everybody. BreakthroughREIPodcast.ca. And go over to iTunes as well. You guys know this. Leave us a rating and review. It's very helpful. We've been getting a lot of I guess, exposure from iTunes, and everybody that's left their words of encouragement and words of suggestion and their reviews of whatever kind they might be over there on iTunes. So please continue to do that. It helps us a lot. So, and we appreciate everybody that's taking the time to do it. And it doesn't take that long, go over and just let us know what you think. So, I'm going to go back to reading some reviews, which I was doing before, but It's been a while since we've done that. I think next show we'll get into reading some of the newer reviews for the show. So anyway, with all that stuff out of the way, just want to say that we're really excited to talk to today's guest, Jeremy Ivany, on how to start early, how to continue growing using JVs and other people's money, VTB mortgages, and other strategies when you're out of your own money, right? So we're very excited to have you on, Jeremy. Welcome.
Awesome. Yeah, no, thanks, guys. Thanks, Andy. Thanks, Rob, for having me on today. I'm excited to share my journey and hopefully inspire others to kind of get the ball rolling in their career and kind of live that financial independence life that I think a lot of us are striving for to achieve. So
awesome.
Awesome.
And when you say start early, we mean early. Like we're going to talk about your experience and how early that is, but it's at a really young age compared to most people. It's exciting. You're a full-time investor with your partner Taylor Seers, and you've created. I'll just do a quick background for you. You've created TJ Real Estate. So that consists of your own property management company or in-house management of your current portfolio, 60-ish units is what I've heard there. And you and Taylor have completed several wholesale and wholesale deals and have recently sold some of your first buy and hold properties to trade up for bigger buildings. And TJ Real Estate currently continues to grow and scale their portfolio, demonstrating the power of starting at a young age. What age did you start at?
So we bought our first house when we were 19. We didn't actually start investing in real estate until we were 22. So kind of a little bit of backstory about myself. So I actually moved out west when I was 18 years old, and that's really where I got the first kick of real estate investing. I was living with a guy. There was, I think, 10 or 12 of us living in this mansion. He was charging all of us like $900 a month to live in a room, and I was like, well, this guy's making some killer money off of us. So that was kind of where I got this first idea of like, buy a house, get other people to pay it down for you, reap the rewards of the cash flow, the mortgage pay down, and the appreciation over the long term. But it wasn't really till I was 22 when I actually came back to Ontario and started working as an electrician. And I kind of got that income coming in where I was like, now's the time to do this. So we bought our first real estate investment property when we were 22, about 2.5 years ago now. And right away after the first two properties, we kind of ran out of money. And that's really when the strategy started to kick into play, because I knew at a young age, I said, we need to grow our portfolio fast in order for people to take us seriously. So since then, we've done about 30 deals. Currently, we only hold 16 properties. We actually tied up 4 yesterday. So really trying to scale up our portfolio. And over the next 2 years, we're really going to try and triple the size of our business, which we think we're going to be doing, like I said, through other people's money and more creative strategies to keep that ball rolling. Me and Taylor have this mindset of there's always somebody that's going to say no, and there's always people that are going to say yes. And those are the people we try and surround ourselves with. And never take no for an answer, and then really try and push past our boundaries every single day.
So let's dial back a little bit. You mentioned that you were living in a house and with a bunch of other people getting charged, a certain amount of money per month, and you realized what that was doing for the person who owned the house. So is that did that bug always stick with you, or was there some other sort of light bulb aha moment that went off, or was that the one?
Yeah, so that wasn't really the real estate light bulb that went off. The real estate light bulb went off for me. I went to a conference that Matt McKeever held in London, Ontario back in 2019 called OREC 2019. That's really where I got this true inspiration for real estate. That really put me into perspective when I was 19 living in that guy's house to just try and save my money and build up some sort of nest egg where I can then go and invest it in something. I didn't know what that something was. I just knew it, whether it be stocks, whether it be real estate. I wasn't really sure at that point. I was still young. I went from making like $12 an hour working at McDonald's to making, $25 an hour in Alberta. So I was just this young kid that really didn't know what was going on. I just knew, hey, I got like $800 coming in a week. I should probably, do something with this money aside from just spending it, going out and partying, things like that. That majority of the people that I was surrounded by were doing. So.
Okay. And then you mentioned that that when you were out and started to make some real money, that was when you decided to take the jump and purchase something. So was there like, what was behind that then? Tell us a little bit of the backstory there.
Yeah, so like when I got this light bulb moment, it was like I said, when I was at OREC 2019, it's like we were listening to people that, retired in like 2-3 years. And I thought like, that is exactly what I want. I don't want to be working like I was an electrician. We were working, I was getting up at like 6 a.m., working till 8 p.m. at night. I knew even like after doing this for a couple of years, like this is not what I want my entire life to look like, right? I want to be able to travel. I want to, like when I have kids, I want to be able to spend time with my kids. I'm a really avid golfer. Like I want to golf every single day. And so that's when the true inspiration happened, was after that event, seeing people that had the same struggles that I had. Because when I went to the event, I only had $50,000-$60,000, and I thought, how the heck am I going to grow this portfolio where eventually I'm going to be able to retire on? I'm thinking about, I got to save up $50,000-$60,000 for a down payment. Like this is going to take me like 3 or 4 years every single property to save up. And then I realized like there's actually other ways to get down payment money. There's other ways to source renovation funds, things like that. And I realized like everybody else that's doing what I want to do is having the same issues that I'm having, just on a different level. So I thought there's a way to do this. I just need to figure out how that is.
and how did you figure it out?
Obviously just through trial and error. Like I said, so after that event, we bought our first 2 duplexes kind of right away, and we were out of money. So just out of the blue, Taylor's parents said, hey, if you guys want some money, we'll lend you guys some money. And so then we were able to then we used the money that they lent us actually for the down payments. Even though we had the down payments ready in our bank account, we used that private money to source the down, or to fund the down payments. But then we still had our original money left over. So then we were able to buy a couple more properties. Then we ended up BREIing all of those properties. So then that gave us enough firepower for the next few properties. Then we had like 7 or 8 properties kind of in the first like 6-7 months. And then naturally joint venture partners started to come to us, right? I was sharing what I was doing on social media. I was sharing the success I was having and trying to inspire other people. And then naturally people just came to us and said, hey, I've got $100,000. I've got X amount of money, Jeremy Taylor, but I don't know what to do. Let's partner on something together. You show me how to do it. And let's kind of share the property 50-50. So that's how we really started to branch up and grow our business kind of in the beginning stages.
I love how you went pretty quick over. We just bird those properties and got it over, and it was really easy. And what were some there's some challenges in there or something that came up when you were burring? It sounded like you were burring multiple properties: buy, renovate, refinance, rent.
Yeah.
Right? I think Rob's frozen, by the way. Is he? Or he seems frozen. I'm sure he'll come back if he's gone for a minute. But yeah, you made it sound really easy. I'm sure there was some ups and downs there. What were some of the challenges that kicked in when you were doing that early on?
Definitely. So when we the first duplex we actually bought, so we invest in Chatham, Ontario. It's a town an hour away from London. It was a market that had a low barrier to entry. The cash flow was really good. The purchase price per rent was very good. We really liked that ratio, which is why we chose Chatham over London. And so when we first got into Chatham, I didn't really have an idea of like what were the good, like there wasn't as much resources 2 years ago as there are now. Right now, everybody tells you like research the areas you're investing in, understand, what are the fundamentals in these types of areas. But I didn't really have any of that. I said, well, these duplexes look cheap enough. They look like they're going to cash flow. And the first duplex we bought was in like an absolute war zone. Like I'm talking like a lot of drug activity, a lot of violence. We just didn't know. We just thought, you just invest in a property and everything's gravy. So that was one of the biggest issues we had from the get-go. Was we realized tenants didn't want to live in our duplex. Contractors didn't want to work at our duplex because they felt unsafe. So that was definitely a big learning curve for me. It was like understanding, okay, I bought these 2 duplexes. Let's not make this same exact mistake again. Let's understand like what areas should I be in Chatham to help avoid these things and overcome it.
I just find it interesting because you didn't really seem to, like you mentioned an event that you went to, but after that you didn't really seem to have any sort of real guidance. You just sort of said, okay, I learned what I needed to learn at this event, and now I'm just going to jump in and do it.
Yeah, I'm a big, so actually right now we're coaching a lot of students, and I'm a big proponent on more action and kind of, because I think what a lot of people get stuck in is they get stuck in this, I need to know everything before I do something. Whereas I'm in the mindset of like, let's just do it. Let's figure it out. What can go wrong, right? I was 22 at the time. Like what can actually go wrong here? I got to start over from ground zero. I'm kind of already at ground zero. So let's just, if I have to restart, let's just do it. But then when I got into the real estate game, I realized like there's so much more to learn than what you're going to learn on books, podcasts, listening to, other real estate investors talk, because there's so much more involved that that's hard to really relate. But when you actually see it in person and you realize like what actually happens when a tenant doesn't pay, right? Like I don't need to read books to learn what happens when a tenant doesn't pay. I just need to kind of think like, what are the next steps? Well, probably the next step is like, there must be some sort of form, or there must be sort of like way I need to approach this person in order to get my rent, right? Like it's very easy to learn when you just get put in really difficult situations and you're like, I got to figure it out somehow. So.
Yeah, I think you have a lot of people. You took action pretty fast. I think that's you probably have a little higher risk tolerance than most people.
Yeah.
But ultimately, whatever sort of risk adverse was there, maybe there was nothing. But it ultimately you took action and you learned through it. And I think part of the benefits of starting early is you could screw things up completely, and you still got lots of time to figure it out, right?
Sure.
So I think you're at that time. It's I don't know if it's easier to take action or not, but it's certainly. I feel there'd be less risk. I think it's no better time to start than when you're young. That said,
yeah. I mean,
that's the best time, but the next best time is any time that works right now. If you're 50 or 60 or 70 or whenever, right? There's no real wrong time.
It's interesting because I do believe that there's a little bit of a balance there. But the funny thing is that, where is it? And it's different for everybody. And I would say for you, it was probably the right thing to do to take that action right away, because it's in your personality, and you've told yourself, I'm not just going to throw my arms up in the air. If something goes wrong, I'm going to figure it out. Right. And so as long as you have that mentality, I believe that the answers are out there for anything that you will come across, regardless of what you've jumped into. I do think the most important thing is to take action. So congratulations for doing that. But would you have changed it? Would you have learned? Do you think you would have stepped back and said, okay, let me learn a little bit more. Maybe these areas weren't right. Maybe I should have done something differently.
Yeah, I mean, it's kind of hard to say. When I bought back in 2019, I mean, I think it goes without saying, I think you really could have purchased anything in 2019 and made money from it. So it's hard to really put that into perspective of like what could have went wrong. Really, I could have bought anything and I would look like a genius today, especially in my market, right? My market's doubled, tripled in price in some areas. So if I would have stepped back, I probably would have, I think a logical thing to do would probably just reach out to, people in that area that were killing it at the time, that were purchasing properties, and just saying, hey, like, these are the properties I'm looking at. What do you think of them? And kind of getting guidance that way. But I'm honestly, I'm thoroughly happy with the decisions that I made kind of early on, because a big thing for me that was really holding Taylor back was there was a lot of people around us saying, like, maybe you guys should wait. Maybe you guys should take it a little bit slower. And I can't help but think the situation I'd be in if I had listened to people, because a lot of people that were giving us advice were people that weren't doing what we wanted to do. And I think it was something I learned, or I just kind of told myself very early on, is there's going to be people that doubt what we're doing, and I'm just going to prove them wrong. And I'm a very competitive person. I really like to win, not always like win as in like making somebody else lose, but I like proving people wrong. And I like I like pushing myself as much as I can, and just kind of proving to myself a lot of the time, like, I can actually do this. It seems difficult right now, but I know I can do this. I just have to, take the right action, and just push through it. So,
well, I think you make a good point there, and people do confuse their emotions with business, right? Like, if I was to ask, like, you're right, like, who are you going to take the advice from? It has to be from someone that is doing what you want to do. If I was to talk to Sandy and say, hey, Sandy, like, do you think I should do this deal? And he said, man, like, probably not right now. Then I might, do well to sit back and reconsider. But if you're taking advice from someone who's never done what you want to do, is not where you want to be, then yeah, it's probably not best to take advice from them on real estate, right? So
difficult when it's friends and friends, typically family or friends well, and probably trust in other ways a lot. Right.
And it's tough because you also then after don't want them coming back and saying, well, I told you, you shouldn't have done that. Look what happened. You should have taken my advice. Have I ever steered you wrong before?
Exactly.
So it does get confusing, a little bit difficult, but yeah, that's, I think, one of the best points that's our golden nugget for today, really, to take advice. I mean, there's probably more. We're just barely into the interview. That's going to be one of them.
Yeah, and I think, I mean, really the best example I have is somebody told me not to invest in real estate. They lent me $70,000 to buy 2 properties. I'm paying them 6% on their money. So over the course of 2 years, I've probably paid them, $4,000 for that private capital. I've since then actually sold those 2 properties and made a significantly higher profit. I actually gave them the opportunity early on to invest with me. In the actual deal, be a 50-50 partner, but they just felt more confident just lending the money and not being part of the deal. And I think that's a really good point, is like, I think a lot of us just get scared of like, what's my worst case scenario? And let's always think like, what's my worst case scenario? I like to look at things and think like, what realistically is going to happen in this situation? What's like my best case scenario? Because I know I'm going to, put a lot of effort into it, and I can majority of the time reach my best case scenario. Right? Especially now, I have the fundamentals. I understand what I'm doing. So now I really understand, if I do this, there's a very good chance like my best case scenario is going to be what happens, right? Because I'm very niche down now, and I'm very particular in what I'm purchasing. But just early on, like I said, I was willing to do that extra work in order to make that deal work.
So now, fasting forward to today, I guess you're at, what's the portfolio look like, and mention your age if you're okay with that too, because I think that inspires a lot of people.
Yeah, so I'm 25. I just turned 25. Taylor's still 24, so he's gonna be younger than me. But yes, I mean, so right now we've got 60 units. Like I said, we just tied up 4 more properties yesterday. My goal is by the end of the year to be at 100 units. I don't really see a big barrier for that, but yeah, so we got 16 properties right now.
Are they all in Chatham, or
all in Chatham, all within 5 kilometers from each other? So like I said, I'm very niche down. I understand exactly what I'm purchasing. Every single property. I don't need to look at comps. I don't need to any of this, because I'm very focused on one particular area. And actually, a really good point to that. So there was actually a 4-plex that got brought to me in London, Ontario for $225,000 by a seller. And I said, you know what, I'm not interested in London, because I'm only in Chatham, even though I live closer to London than I do to Chatham. But my whole goal was just stay focused on what I'm doing. So I gave that property to a good friend of mine. And when I gave her that property, it was a few days after she was talking to somebody who owned a 12-plex in Chatham that I ended up buying the property from, just because it was like the time of day she was looking at this 4-plex, and she just happened to run into this person. So I don't know. It was just something cool, I thought. But like I'm really in the mindset of like, I want to stay. Like, I realized kind of halfway through our journey, so about a year ago, I realized like this is really boring, but I'm making a lot of money doing it. And any time that I've gotten excited about doing something different is when I haven't made the returns that I've made on the boring stuff, like buying the duplexes, buying the 4-plexes, buying the 12-plexes. I'm really good at that. But then when I get into flipping, or I get into wholesaling, things like that, I don't really see that return that I'm seeing on some of these other projects. But that's because I'm doing something different. I'm not staying focused on what the actual goal is.
It's part of the challenge in business in general. Probably almost any business is the boring stuff. Is probably because you're mastering it and you're getting so good at it that it becomes a little boring, and it loses a bit of that initial excitement, right? And yet, that's kind of what you sign up for. You want to get to that boring stage, so that that's a sign that it's you know what you're doing really well.
Exactly.
Yeah, there's always that appeal of the silver shiny object, right? That you gotta, at times it's worthwhile to maybe spend some time around that too. But
yeah,
balancing that out and not going too crazy on the shiny objects and bouncing around all day, in every different direction. That's usually a sign for or a recipe for a lot more challenges, and probably throwing away some of that money that you're making in your really easy stuff that you should just focus on, right?
Absolutely.
And to your point, you're not spending a lot of time when deals come across the desk, whether they're a deal within a couple minutes, and you can take a look at it and go, no, this doesn't look like a deal. I know exactly the area and what this should be, or if we're going to put in an offer, here's what the offer needs to be, because I understand the area and I understand that, this is priced too high or whatever. It takes you a couple minutes to place a value on that property, right? Whereas if you did wander out into London and other areas, you have to learn them. Not to say that one can't do that, but that is what you would have to do in order to be responsible and know whether that 4-plex was a deal or not. then you've got to start
Exactly.
searching and spending half your day going, okay, what are other fourplexes in London going for? So no, I really like that. I think it's important to be an expert in certain areas, in the areas that you plan to focus in.
Absolutely.
We're going to ask you a bit later around how you find these types of deals, because it sounds like you're buying every deal in Chatham, because I know it's not that big of a place. But
I try to.
but what's your
the strategy.
What's your plan? Maybe that ties into this anyways, but what's your plan to continue growing the business and obviously finding more properties or building the portfolio bigger?
Yeah, so we've got a lot of capital partners backing us at this point. The whole goal, kind of to Rob's point, is like in an ideal world, I'd like to own every single multifamily that's in Chatham. Obviously, that's not something doable. So, like I said, our plan is in the next 3 years we want to triple our business. In the next 2 years we want to triple our business. We want to get to 200 units in the next 2 years. And how we plan on doing that is just continuing to buy off-market properties, direct to seller. That's where we're finding we're getting like the most value, and where we're still seeing like cash out refinances where we're paying all of the capital money back and we're actually getting a payment at the end of the day in our pocket. Versus, when we're buying on the MLS, we're sometimes, typically leaving $30,000-$40,000 in the deal. So the sweet spot is definitely off market. And I was actually out in Hawaii at a mastermind a couple weeks ago, and one of the things we're trying to focus on is like what the business looks like in order to achieve 200 units. So one of the biggest issues that we have, even though we're still buying a lot of off-market properties, there still needs to be more deal flow. So one of the ways we're going to combat that is we're actually hiring somebody full-time just to help us with acquisitions. So they're going to be door knocking, connecting with realtors, connecting with sellers, analyzing every single property that comes up on the MLS, and just really giving them a guidebook of saying, these are all the check boxes we need to check off. If they meet all of them, it's a simple conversation with Jeremy that's going to give the yes or no for that approval. And we're just going to make it more of a streamlined process so that we're able to really kind of ramp up the way we're buying properties, and really just trying to focus on like the core model of buying the properties and outsourcing everything else beyond that. So right now we're managing all our properties in-house through a property management company. We've actually hired a property manager since the time that we really last spoke. So they're going to be dealing with all of the tenant complaints, leasing the units, doing all the maintenance on the units, really everything. So that puts Taylor and I in a really good situation to focus on what we're good at. Really how we were able to grow our business at the beginning was, finding capital and finding deals. But, when we start having all of these units, our time gets eaten up by wearing all of these other hats, being the contractor, being the property manager, being the maintenance guy. So really just trying to step back and understand, like, what do we need to be doing right now that's going to get us to where we want to go?
Okay, so let's talk about how you, like, what strategies do you use to attract JV partners or other investors?
Yeah. So I think the easiest way that I've been able to find joint venture partners or capital partners, pretty much anything under $1 million we're going to buy personally. Especially if it's a BREI. If it's a BREI, we're not even going to approach a joint venture partner. I'd rather keep the asset 100%. Now it's definitely different a year ago, right? Because I was a little bit more hesitant. I wanted to make sure like I wasn't going to just like collapse if a deal, if I didn't get that entire down payment back out, whatever the case may be. Whereas now I'm a lot more comfortable. So the best way is just through social media. I think just sharing on social media every single day what you're doing just sparks a lot of curiosity in people. The amount of people that I've borrowed money from where they've refinanced their house, and they're lending me the money at 4% and I'm paying them 10%. A lot of people just don't know these things, right? So when you're able to just educate people every single day, like, this is how I bought this property, this is how I was able to get the down payment, people are like, I can do that too. I actually have $500,000 in my house that I can lend to you. Perfect. And a lot of times when we're borrowing money from people, they're like, I never even knew this was possible. So like to your point, social media has been the biggest one for us, or just showing them like, hey, these are the returns we got on this property. And they're thinking, wow, I'm getting half of that return in my market. So I could go and invest in your market. You could do all the work for me and I'm going to get the same return, but do none of the work. Sounds like a pretty good deal to me. And that's how we've been able to really attract joint venture partners, but just being that guy that people want to work with, right? Like, people want to work with Taylor and Jeremy because, you know, like, I think we're, you know, we want to be your best friend. We want to hang out with you. It's not just like a business transaction. We want to build like some sort of long-term relationship with you. We're young investors too. I think a lot of people can resonate with, you know, how much work we're going to put into the asset versus maybe somebody who's, you know, got a couple kids at home, got a full-time job, things like that. We try and be that person that people can align with, and obviously trust us with their money. So.
Yeah, it can snowball pretty fast, right? Find one or two of them, and then all of a sudden, word goes pretty fast. Especially if you're being very out there about it, like you said. I think that's huge to be active on social, show what you're doing, share tips, strategies, ahas, right? Like, it goes a long ways.
For sure.
I mean, everyone's sitting on their phones all day anyway, so you might as well be on there and in their face as much as you can. How did you decide to leave, like, being 25 and essentially retired from the 9-to-5 gig? Was that a goal, like, initially, like a couple years ago, to get out that fast? Was that part of your goals? And how did you do that? Because that's pretty young to do that.
Yeah. So when Taylor and I first bought our first property when we were 22, we were like super, like, all we thought about, and we kind of still think of this way, is like all we thought about back then was like real estate. It's like every conversation was about real estate. Everyone we were hanging out with real estate. So we started like developing goals. And actually our 5-year goal was for me to quit my job. And then our 7-year goal was for Taylor to quit her job. So during COVID last year, I think we had 5 or 6 properties, and I got laid off for a week. It was just 1 week I got laid off for. And during that week, I found a property off market and I wholesaled it. And I made $15,000-$20,000 from the wholesale. And I thought, wow, I have to trade like 1,000 hours of my time in order to get that at my day job, where I just traded like 4 hours of my time and knocked on a door and I got a property and assigned it to somebody and made that much money. So that was like a real light bulb moment for me. My boss called me back I got laid off on a Friday, and he called me back, and he was very upfront about it. He said, this is only going to be a week or 2 week layoff. So I just took a lot of action the following week, and he called me back on the following Friday. He said, hey, Jeremy, I want you to come back to work next Monday. We got a lot of stuff picking up now. And I paused on the phone, and I was like, I can't come back. I said, I can't come back. And so I went home that night, and I was actually working in Chatham on one of our renovation projects when he called. And I came home that night, and I talked to Taylor. I said, hey, what do you think about me quitting my day job? She was working part-time. We had a huge mortgage to pay for. And like I said, we weren't really cash flowing. There was a lot of renovations going on, but we were investing everything back into the business. I said, what do you think about me quitting my job? This is the plan. This is how we're going to probably make it work. And she's like, no, there's no way. You can't do that. Like, everything's going to go south. And I said, well, I already quit my job, so I don't know how else I'm going to. I get very like passionate about things I'm doing sometimes. Like, I get very like I kind of have like an obsessive mindset sometimes. And I was like, this makes so much sense. I don't think anybody's going to tell me it makes sense, but to me it makes sense. So let's just go for it. And then kind of from there, like I said, we've done about 30 deals so far. At that time we had 6. So in the last year we've done like 25 deals, whether that's buy and hold or wholetailing. So like, when you actually just put all of your focus into one thing, massive results can come out of that. And that's kind of what I learned, like that 1 week I was didn't have a day job. I was like, imagine I did this 52 weeks out of the year. Like, how much money can I make? How much opportunity am I leaving on the table for somebody else that's just willing to take that additional risk? So
makes sense. Thankfully, you got laid off. Thankfully,
Yeah.
I think I've heard quite a few stories like that in the past year and a half or so. Right, it's really changed people's perspective. This whole pandemic, there's a lot to be thankful for at times around how that's played out for a lot of people. Right, it's pretty crazy.
Yeah, you never know what's going to happen. That was kind of similar with Taylor. Taylor quit her job 3 months ago, and the goal was like, once kind of this year when we really started building our business quite aggressively. The goal was May 2022 was when she was going to quit. Now, the only people we hang out with really at this point are real estate investors. And so every time we were around, pretty much all of them were doing what I was doing. We were all didn't have full-time day jobs. We were all just kind of doing real estate when we felt necessary. And they were kind of all pushing Taylor, like, you got this, because Taylor's kind of like, she wants to be comfortable, right? She doesn't, a lot of times she needs to, like, it's hard for her to get out of her comfort zone. But I think to the point, like just being around people that are doing really cool things all the time sparks a lot of interest in people. So with Taylor, like she saw like how much I was building the business doing this full time. And then we thought like, how much more can we build this business? Like imagine we had, instead of 40 hours a week, just Jeremy, we had 80 hours with you and I, right? And then as soon as she kind of left her day job, we've even taken off at a higher rate of speed. So.
Yeah, that's really cool, guys. Congratulations, by the way.
Thank you.
I mean, not too many people have the same story that they can tell. And so how has your day and your lifestyle changed because of that?
Yeah, for sure. So we're traveling lots. We're going to be out in Costa Rica for 2 months in January. I mean, we're traveling pretty much every single month for a week. So what's changed for us is we've just thought, okay, our goal with real estate was so we could travel all the time. But we still have this mindset where we're like, do we have enough money to travel? Should we kind of wait a year? And then we're like, no, let's just do it, because we're always going to have this idea of like, let's wait till there's a better opportunity. So we're trying to develop our business so it's able to scale when we're not around. Trying to really putting our biggest focus right now is making ourselves replaceable. So what I do, making myself replicatable, so that I can just hand it off to somebody else and they can do what I'm doing, and I can go enjoy the travel life and kind of build the business from afar. So that's really what's changed for us now, is just kind of thinking more outside the box. Because really the whole idea was when Taylor quit her job, we were going to, grow the property management company, do all of these other things. And then we realized this isn't what we're passionate about. I don't really like dealing with tenants. Tell you the truth, I don't even really like buying real estate, but I understand the benefit it has for us. Right. So that's why we're like, let's outsource, like, especially now. Anytime I do something besides buy a property or raise private capital, I think, how can I get somebody else to do this task for me? Like, because I want to do this once more and then never have to do it again. So we're using Looms. So like even writing off-market offers. Like I record myself writing these offers. So when I hire that person, they understand how I'm doing that. Right. So if that person doesn't work out and I have to bring on another person, I have all of these documents in place so that I'm able to train them a lot more efficiently. And really just with everything, right? We don't like property management. We're going to hire that out. That's kind of the mindset we're in right now.
And then the life goals, like you mentioned that you're going to travel. The goal is, I guess, a week a month. Is that what you said?
So we're traveling a week a month right now. I mean, the goal is like, we want to have a big family. So the goal is like when we have a lot of kids, like to kind of be able to spend a lot of time with them and like still be able to travel and just kind of live like a life where there's no sort of, there's nothing I have to, go to or, wake up and have to do, right? I get to decide what I want to do every single day, because we're still growing in a business. And there are still things I have to do every single day where maybe they're not outsourced right now, but just really positioning ourselves so that when we do start, building a family, things like that, that we're completely focused on that and really nothing else.
So give us a little bit about, because I think sort of sometimes we more focus, Sandy and I in the show, about, how people are being successful in real estate. And we do talk about, I think that it's time for us to maybe put a little more emphasis on why we are doing this. Like, it's great to be successful. It's great to enjoy building a real estate company, because those of us with passion for real estate, and I think you do need a certain amount of passion, where, maybe some people like to do it just as, hey, it's a means to an end and I don't like it. I think the majority of the people that we talk to on this show really do have a genuine, love for real estate. And so that's one thing, and that's fulfilling in a way too. But we all do it so that we can do things like travel and spend more time with family. So tell us a little bit about, what are those goals? Where are you going? Why are you going there? All that kind of stuff.
Yeah. And this kind of takes me back a couple of years. Like my grandma got sick. She had a heart attack 3 years ago, maybe 2 years ago, and she survived. But we were kind of like, our whole family was in the hospital, and we were just kind of all sitting in this room, like waiting to hear what was going to happen. And like, that was the first realization I had, was like, I haven't seen like any of my family in the last like probably like 2 months. Right. And I was like, I never want to put myself in this situation again, because really like, that's what means the most to me, is like spending time with family, spending time with Taylor, spending time with friends, like that is really where I get the most enjoyment. And that's really kind of why we really pushed into real estate. But yeah, like to your point, like the goal is to not have like this huge emphasis on money. Like I'm really not tied to money. I'm tied to what money can provide for me. What can it provide to my family, my friends, things like that. But I mean, every single year we do charity things, and try and give back, because like I said, I'm not tied to money. But what I am tied to is, being able to travel when I want to travel, being able to, go golfing when I want to go golfing, being able to hang out with Taylor when I want to hang out with Taylor. So that's really what's important to me. And real estate's just a vehicle that's helping me get there.
So we talked about Rob's trying to talk to his muted. We talked about your portfolio and how you're kind of repositioning it. What's exciting about moving up, I guess, in that sense, and you're looking at larger asset classes, 12-unit buildings, etc. What's the goal with that and the reason?
Yeah. I mean, I definitely love the multifamily. I think it's a lot easier to make a lot more money doing that. So it's like if the goal is, let's say I want X amount of capital or I want X amount of net worth, I mean, definitely multifamily is where I'm finding it's more of an acceleration.
Why is that? Why do you say that?
I mean, definitely with just turning over units and being able to utilize like a cap rate versus just like what a comparable is going to sell for in Chatham, I mean, for the longest time, duplexes were only selling for $200,000 when they were fully renovated, fully rented, at like peak market performance. But you're buying them for $130,000. So to put $40,000 into the property and make $30,000, it was really hard to, like, how do you scale that to make $1 million? I mean, you got to do a lot of these properties. Obviously now the game's changed a little bit more, and ARVs are rising. Things are selling for what they should sell for versus what they used to just sell for, obviously because everybody wants to be a real estate investor, which I don't blame them. Whereas in the multifamily space, I mean, especially in Chatham, we're buying these buildings where they're like 40% at market rents. So there's like 60% upside on these rents. We're buying them and they're all rented for $600 a unit. And now we're renting them out for like $1,500 a unit. So we can turn over these units even at like a 7 cap and, get a 14 times multiplier on our monies, right? So if we're raising the value by $1,000 and we're buying it at a 7 cap, well, now we've raised it essentially $140,000 for that $100,000 difference. So definitely seeing it, definitely a more scalable model for sure, because really the whole goal behind the 200 units is we just want to essentially just triple what we have in terms of like capital, because I think that's where we're going to feel really comfortable. But if I can do that with, let's say 40 units less, I'm all for it. So.
And you just mentioned a 7 cap on your purchase of your building. So let's talk about where you find something like that, because that's at least where we are, maybe a little bit few and far between on those type of numbers. So I
should revert back. We're actually not buying at a 7 cap. We're buying at like a 5 cap. That was just more like figuratively speaking. Actually, the first building we bought it for $1.1 million, and there's literally an exact building beside us, and it traded a week later for $1.7 million with the exact same net operating income. So that was like a huge light bulb moment. I'm like, we just made $500,000 just buying this asset, and so yeah, I mean, we're typically buying at a 5 cap, we're refining at a 5 cap, so it's essentially like a 20 times multiplier on our income, but yeah, definitely getting a lot harder to buy properties. I mean, I've talked to what I think would be most of the owners that own multifamily buildings, and I mean, it's getting a lot more difficult to find motivated sellers. A year ago it was a lot easier. Now it's becoming more and more difficult. Now we're essentially buying at like market value sometimes and just selling at kind of like a whatever people want to pay market value at the end of the day. Which is, sometimes like fundamentals are out the door at that point, but they're still like, it's kind of like bullish to think that you're going to always make money like that. And I'm trying to be more self-aware of like, I've actually never went through a market where there's been like a downturn. I've only been in a market where you can like win, right? Mm-hmm. Like I was talking on a webinar the other day, and I was saying like in the last 2 years, it's actually been more beneficial for real estate investors for your contractor to take 2 months longer than what he said, because you're actually going to make more money on the back end. Right, like
it's a good point.
Yeah.
Well, I've always said, unless your income is active flipping, then I've always said, like, just hold on to it. You're going to make more money hanging on to it. Um, yeah, no, that's interesting. But where are you finding the deals though?
Just direct to seller. Like honestly, just a lot of what I do, like even for all of my deals, the best way that I've found properties is just through property managers, just building a really strong relationship with I'm in conversation with 3 property managers in Chatham right now. I have not asked them if they have any properties that they would be willing to let go of. I'm building that relationship before I even ask those questions. And that's what I've done kind of throughout my past, to develop these strong relationships and build that trust, because I like to think there's maybe 3 or 4 other people kind of asking the same questions to these people. I do a lot of door knocking too. Anytime I'm in Chatham, there's so many properties that are in need of repair or have an opportunity to push force appreciation. So like my best strategy is probably just going up to these properties. A lot of them are tenanted, so I understand like the way I need to approach that person versus if it's the actual owner of the house is much different. So a lot of what I do is I just say, hey, look, I own the property like 3 doors down. I need to get in contact with your landlord for some work that we're doing. Like it's a 99% chance I'm getting that landlord's number versus, people that blanket fly our markets and they say, hey, I'm looking to buy your house. And, 99% of the people are tenants and they say that's going in the garbage.
Yeah.
Right. So I'm just a little bit more strategic on like, who am I actually talking to when I deliver these flyers? Is it the owner? Is it a tenant? Because it's a very different, if the tenant's paying $500, there's like a 0% chance they're going to give their landlord your number.
Yeah.
Right? Because they know this asshole or this guy is going to kick me out and charge me $1,500 if I want to stay here. Yeah. Right? So you just have to understand like what's the client look like and how can I, kind of change my strategy up to make this work.
What's happened with the rents? Speaking on that, just briefly, what's happened with the rental market in Chatham?
It's
exploded.
Don't
know if it's gone. Has it gone crazy in the last 2 years? Like, has it doubled or more?
It's literally doubled since I got into the market. It's honestly doubled. And actually, our 12plex. So we bought our 12plex back in February. When we bought it, we were expecting their 2-bedroom, 900 square foot units, very nicely laid out, huge bathroom, huge kitchen. It had everything you could ask for in a 2-bedroom unit. And so we were expecting to get $1,200 a month for rent. Then kind of midway through the closing period, my partner was like, hey, do you think maybe we can try and shoot for $1,295? I said, definitely getting a little tight, but let's push for it. We'll put everything like really high-end appliances, everything to try and get that maximum value. Then when we did the renovations, we said, let's get $1,395. Then we got $1,395. Then we renovated another unit in that building. Then we're getting $1,495. Now we're renovating another unit in that building. Now we're asking $1,595. So it's like it's just on a projection. Like it's like I see like that Dogecoin thing where it's like the guy riding on a rocket ship. That's honestly Chatham and rents, and the price point is not keeping up with it. Versus most cities where the price point's going up and the rents are going like not on the same trajectory. Chatham's like the complete opposite, where the rents are continuing to go up.
You're taking rents to the moon.
Yes, rents to the moon. So I mean, we've seen similar to when we first started buying 1-bedroom duplexes in crappy areas, right? You're getting $800 a month rent. Now you're getting $1,295 plus all utilities. So it's a definitely an interesting market to be in. I think it's a market that I'm really trying to push for new investors. There's a lot of really good opportunities, but it's just finding those opportunities that I think is becoming more and more difficult.
Maybe one last bit of strategy here for the people listening. So you're mentioning that you're turning over these units, right? So how are you getting the current tenants, the ones that you bought the building with, how are you getting them out in order to do this?
Yep. So I guess kind of another point to add, like a big thing that me and Taylor are both passionate about is like homelessness. Like I'm not like my intention when I'm buying these buildings is I'm genuinely approaching these tenants with like, this is an idea I have. Do you want to move? And I'm willing to incentivize you if you would like to move. That's kind of the conversation that I have with people, because the last thing I want to do is, make $100,000 and put somebody on the street to benefit myself. Like we have a really strong understanding, like that's not the people we want to be. Maybe there's a lot more opportunity being that type of person, but I'm just not willing to go to those lengths and have like, if people don't want to leave, that's totally okay. In our 12plex, we asked all 12, we went door by door by door. We said, if you'd like to move, we'd be more than happy to renovate your unit. But if not, it's not a problem, right? So we're very passive in the conversations we have with people, because like I said, I don't want to put somebody else in the street for my own benefit. So.
And by the way, I do not think there's more opportunity in being the other way.
I guess I mean, like, there's more money to be made, and that's, I think, a lot of strategy. A lot of people.
I don't know. I would, yeah, I understand what you're saying, but I think that there's always more. Stepping on heads to get up never makes you more money than working with
right?
people.
Short term, maybe.
Yeah. You just, I mean, that's not the person I want to be, and I try and push that to a lot of people. Like, if you don't turn this bill, a lot of people you see on Facebook groups, things like that. Like, how do I get this tenant out? If the tenant doesn't want to leave, the tenant doesn't want to leave. Like this, you have to understand. Like, this is their home. Like, you're just like, imagine being like, I was like imagine I was in that situation and some guy came to the door and said, "You're leaving, and like you need to just tell me what you want, so you leave." Like, I don't want to be that person. I think we incentivize people, or we give people enough money, so if they do choose to move, they have like a strong foundation when they move to a different place. But we understand too, like if they were paying $500 and they're gonna have to pay $1,300 somewhere else, there's a lot of tenants I'll never have that conversation with, because I know I'm putting them in a very difficult situation if they take my offer, right? So we're even strategic with that, and we tell all of our partners bringing on, like, we're not the type of people where we're going to get these units vacant for you. We'll ask the question. If they don't want to take it, that's the last conversation I'm having with them. And so
that's interesting. And I mean, I think that it's important to be able to go in and turn it over. It's important to run your business properly, but at the same time, there is something that will benefit the person in the unit to the point where they will want to go.
Yeah.
So, conversation is really all you need to have, I guess. Figure out what it is, right? And if it's beneficial to everybody, and it works, then you can move forward.
Yeah, and actually another thing we do is a lot of times people don't have laundry in their units, or maybe their units are outdated. There's actually a lot of times where we'll go in and we'll say, "Hey, if we do X, do you want to pay $150 more a month?" A lot of times people are happy with that. And in our fourplexes, we've added coin-op laundry in all of them, where these units didn't have coin-op laundry. Or sorry, not coin-op laundry, just regular laundry they don't have to pay for. And we say, "Hey, do you want to pay an extra $50 a month to have this service in there?" Or whatever the case may be. So.
Right on. Okay. Man, we appreciate you coming on today. You've shared a whole lot with us. So this has been great. I've enjoyed it a lot. Sandy, have you enjoyed it?
It's pretty cool. It's pretty inspiring. I think others will be inspired by it for sure, because there's a ton of more strategy stuff we could probably dive into. But I mean, ultimately, by the sounds of it, you're putting in the hours, but you're also doing it in a smart way, which I love. You're actually working towards, or already leveraged a lot of this out, and really valuing your time as well at the same time, which is, I think a lot of people get in that trap eventually when they're buying properties at the level you are and they're doing all of it or too much of it themselves. It becomes you're trapping yourself almost, right? And then you're stuck in that grind it's hard to get out of it, because you don't even have the right mindset going in. So yeah, it's awesome to see you doing it in that way, because you're building a life around this. That's what you want, versus just getting all kind of caught up in the excitement of buying properties. And before you know it, a lot of people, do that, and then they're stuck and they can't get out. And it's actually pretty sad, actually. A lot of people get stuck in that for life.
No, for sure.
Yeah, well, I think the thing is not being reactionary, I guess, is what you were leading to there, Sandy, right? Like in every aspect, in the purchase of the property, but also dealing with people and dealing with issues. To, like, what I've seen from you is you take a step back. You're able to assess it on a real level, and then take the action that's necessary. Where from what I've seen from a lot of other people, to not have that tolerance to be able to deal with things, right? Maybe get too panicked or worried or overreacting, when every problem has a solution. And I think that it's really important for people to just understand that, hey, I guess you can't get rid of the human emotion of, getting upset over something, but from a business standpoint, you always have to take a step back and just look at it from other points of view and really put things into perspective. And I think from what I've seen and from what I've heard from you, you're very good at doing that. So kudos on that, man.
Yeah, I guess definitely a point I want to add is, and I think this kind of, we can all relate to this, is sometimes people look up to people like us, maybe, or maybe people higher than us, and they think, everything's going perfect for them. I wish I was in their shoes, because it seems like they have no problems, and we definitely do have problems. There's always some sort of issue that we're dealing with, or some sort of hurdle we're trying to jump over. We're definitely not perfect. We definitely strive to be as perfect as we can, but we understand, like, we're going to still make mistakes. There's going to be a property probably in the next 10 years that I do lose money on, right? There's no doubt about it. It hasn't happened yet. And I'm like bracing, I'm always bracing, like, what can go wrong here? And I don't have everything figured out, but if I don't understand something, I definitely try and do my best to really understand it and how to overcome it. So
that is amazing. How can people get in touch with you? People listening out there, if they want to learn more about what you're doing, where can they reach you?
For sure. So I'm very active on social media, especially Instagram. You get to see my face every single morning, giving a wake-up call to everybody to kind of go about your day in an efficient manner, and try and push yourself one step forward every single day. That's where I'm most active. That's where people can get in contact with me. So just at Jeremy Ivany.
Okay, gotcha.
Awesome.
Ivany.
Yes.
Cool. All right, and we're going to have all your other contact info. It's going to be in the show notes. So anyone that wants to get in touch with Jeremy, maybe you're not on Instagram, I don't know why, but maybe you're not. You want to reach out to him another way, just go in the show notes, and all his contact information is going to be in there. So again, really appreciate it. Thanks so much.
Yeah,
Sandy.
thanks, Rob. Thanks, Sandy.
Yeah.
How can people get in touch with you, Sandy?
Sandy at McKayRealtyNetwork.com would be the easiest way. And shoot me a message. Happy to help however we can.
Yeah, and I think Sandy and I sort of don't take the point that we should at the end of every show. I think that, don't wait. If you want to learn from us, we're more than happy to talk to people about stuff. And we're here for the newer investors, right? To reach out to us and sort of devise a plan, devise some kind of education, or just some suggestions, on areas or on types of investment or whatever it is. Just conversations that people should be having when they're new. And Sandy and I are both open to hearing from everybody. So, reach out to us.
Yeah.
Then on that note, you can reach me at rob@mrbreakthrough.ca. So really appreciate everybody joining us again today, and we will see you next time. Have a good one, everybody.
Okay, guys.